Hey traders, Nick Shaheen here looking at Clover Health investment. Big day for Clover, big day for the markets. As we speak, the S&P futures popped over 4100. Um, so bullish market, as bullish as it can be, right? Yet this stock is going backwards from the highs. Wait, don't start the hate. Let me start with the conclusion first. First of all, I had to do homework in order to do this video. Somebody mentioned it, a couple of people mentioned it in my chat room today. The link to the chat room is down below. We do good things. We have inching in on 300 people in there of all styles. So I wanted to make sure to give them some direction. Clearly, the stock is broken, but doing the homework, even though it was hard to find the facts, the company is not broken. So that's the first good thing. Stock broken, company definitely not broken. So these are two facts. Anything from here now becomes more opinion than fact. And my opinion is definitely not judging the company's prospects, because out of the homework I did, I came across Chamath Polyhapatia. Hopefully I didn't mess that up. Brilliant investor, billionaire. Clearly he knows a thing or two about money and buying opportunity. So I will leverage his homework and believe the company. So I did homework. I did look like in the platform here. Usually I have financials on Yahoo Finance as well. Nothing. It shows zero. So I was like, wait. So I went to the company website, and Clover Health reports growth of 46%. Unless this is a different Clover Health, I'm going to take their word for it. So the comments here would be more about timing. Okay, so the assumption again is the company is not broken, so is this a good time to get in or get out? So I'm going to give hindsight, and hopefully, but the method is the same. So I don't have a trade on it, so it's a pure opinion. And let's make the comments, folks, just be civil. I don't mind debates. I don't mind the opposing opinion, but comments that are hateful is just childish. So in this case, I drew this box right now to show what I think the levels are at play. Those are the assumptions. Let me tell you who made a mistake. Two groups made a mistake recently. Somebody who bought it right here, anywhere here, and somebody who sold it anywhere here. And it's probably the same person, unfortunately. So emotional stocks like these, we have FOMO, right? The fear of missing out. It's an innate thing that we all suffer from because it keeps us alive in the wild. If we were still living in the bush, if we see a herd of humans running out of a forest, we are programmed to turn around and chase them. That is very bad for stocks. That gets us in too late and out at the wrong time. So here we're feeling it. I gotta buy it, but I should not, because it's approaching a prior fail point. I'll zoom in on it a little bit later, and you'll see how pointy it is. It's coming into a failing point. So if I didn't get in here, I should know that I'm at the tail end of an extension, most likely. Then I wait for it, and it starts going red, and then the opposite FOMO kicks in. Same instinct, that the fear kicks in at the wrong time. Closing longs here is a mistake. Why? Because this was proven support just days earlier. Now, so how can we use this information now? Look at it. Again, today, somebody was tempted to bail out right here. Somebody did bail out, because for every buyer, there's a seller. So the only way this went up is that there was a huge onslaught of buyers and very many willing sellers, equal number of sellers, for the stock to transfer hands from weak hands who did the wrong thing, selling at proven support, and the smart people who bought it anticipating a pop. However, the person that bought it up here maybe made a mistake. So I'm not saying it's a mistake this time, but going into the same prior fail to the freaking penny is not smart, in my opinion. It's better to buy it high above it and run with it. So it's like the momentum traders buy high and sell higher. I should forego the FOMO here and show me the money this time. Tell me why this time it's different. So this is how this is technical. Trust me, I look at hundreds of stocks, hundreds of tickers every day. I make an opinion on hundreds every day live. All right, let me show you something. Here's the chat room. This is the channel that I have request stickers only, and this is just today. And yesterday just as long. So I get bombarded by charts, so I'm looking at them, and this happens all the time. Machines are doing the trading. Machines use binary to decide. It's a bunch of zeros and ones for the code, and they look at what happened the last time they were here. That's an important value, parameter 1. The other parameter is they look at who's in charge of the action. So in this case, it's the bears. What do you say, bears? Yes, overall, the pops are being sold. That's how you develop a lower high trend. Now they have the opportunity to break out of it. Why? Because they set the floor. So bottoming is a process. It shouldn't be a flash point in time. Like V bottoms are no good. You need to have what is that called? A trough. So first thing, stop making lower lows. They did that. So the second thing is it's okay to continue to make lower highs, and then they come to blows. They meet up by going sideways, and then the battle either break out or another leg lower. And guess what? If it's another leg lower, I won't say what happens, but I don't think it should happen here, because if they have a legitimate business, this floor should be good enough. Now the extrinsic factors are the stock market is at an all-time high, an extremely high all-time high, with a big gap in the SPY. So chances are the SPY should dip a little bit. Don't say I'm a perma bear. I called on 329. I issued a long SPY SPX call to target 403.9. It came. So we were long before the pop, and I'm telling you that we should drop a little bit in order to establish a better base. That could put pressure on this one. So good stocks will fall if markets fall. Nobody's going to rally alone. So let's look into 1 hour charts. So this is the same chart at a 1 hour basis. I wanted to show you today. Today is 4/8, April 8th. This is the high of today. Look left. Tell me that this is a coincidence, that the high from March, what is that, 1st? A fail point of March 3rd is exactly the value of today. And it was the floor they tried to hold a few days earlier, 26. They bounced from it. These are just 1 hour each. So they gapped up and then immediately reverted lower, and they couldn't even close inside the gap. So that candle closed down here. So it's not a strong place to start longs. That's my opinion. So how could it unfold better going forward? All right, so here it is. Sorry, the chat room is open. Hey, Peter. Okay, so you've heard of cup and handle, right? Head and shoulders, inverse head and shoulders. It's all about a battle over a point in time, a line. So here's a line. Okay, sorry about that. That's a line. So they tried to hold it, they succeeded, then they failed miserably. I mean, they didn't even slow down here. So they came back to it, essentially they failed at it, and here they are back at it. You've heard of cup and handle and inverse head and shoulders. These are both bullish patterns. I don't care what you call them. What I see is failing point, right? Bears won. Bears won. Outcome, the assumption is the bears will win again. I'm not forecasting that as bad news, because that's fine. 20% rally should abate a little bit. As long as they're still building positive momentum here, that's fine. They can repeat this as many times as it takes to then finally get above here and then go to the moon. They're going to have to close the gap, this one here, and they're going to have to deal with a lot of scar tissue up here. So these are resistance levels. But step one is go above, prove that it's support, and it can be lower after they go above. It's not a hard line in the sand, in my opinion. I've seen it happen. This line here is important, 8.65. This is the point of control. That's where there has been the most buying and selling. So look, today's close stayed above it. That's good news. So if they can hold it, come back. So now you've got whatever you want to call it, cup handle forming. So now they need to draw the right-hand side, the handle, the inverse head, or inverse shoulder, whatever you want to call it. I think there should be a battle here. The assumption is that the bears will win, but if somebody shorts it based on that, they should stop out immediately, because if this goes above, then they're wrong. The bulls should not go in until they go above it. That's my opinion. Or buy the dip. So if it fails, tomorrow's Friday, let's say it has a bad day or two, and it comes down to here, it's a tradable buy. Why? Because the assumption is that this is holding, tradable buy, swing it all the way up to here. This way I don't have to decide to buy it up here. I'm already long from a reasonable place, and ride it and go. That's the better strategy than just to pile in because it looked good or it felt good. So this FOMO thing keeps us alive in the wild because we avoid danger when we see a herd running the other way, but it definitely gets us to get in late, and get out at the wrong place. It's the same thing. Fear and fear of missing out, and fear of, oh my gosh, I'm losing my shirt. So instead of getting in here at the wrong time, and the same person is probably getting out here at the wrong time, let's use some logic. So again, my opinion is, I'm not an expert at this business, but what I've read about it and what I've heard from Chamath, it makes sense. They are providing a service. I think it sounds more like to the benefit of the doctors, but the patients are byproduct beneficiaries, which is cool. So it's only a matter of time for them to expand age-wise. I say that because I looked at their website and it's only old people in their pictures. So they look like they're targeting a segment. So my kid is not their target at 19, let's put it that way. Good opportunity, but we have to be realistic. Okay, so this is enough. It's about 12 minutes. There is a link to the chat room down below if you're ever curious. It's free to try it out. It's not free to be in it. But the transaction will take you to PayPal. I get people freaked out. Why is it PayPal? I was like, it's $0. I just want to qualify the person going in, not being a troll wanting to disrupt my 300 people that are in there. So it's a real chat room with real people and different styles. We have futures traders. We have equity traders. We have perma bears. We have perma bulls. But everybody's nice. We've had 3 people kick out in, 7 years, 6 years, something like that, which is not too bad.